Well, back to the advisory. New payday super laws come into effect on the 1st of July next year, meaning that super must be paid at the same time as wages, not quarterly. In alarming news, my next guest says 40% or more of small to medium enterprises are unaware of the changes. Guy Callaghan from Banjo Loans CEO joins me. Guy, it's one thing to be unaware, but how underprepared could they potentially be too?
Oh, look, I think a number of businesses are going to be really unprepared for this. And I look at it, it's probably a good and a bad thing, Juliet. Bad that they're going to have to really step up to the plate here and be prepared as quick as they can. And some are going to get caught out because it's just more legislation and more compliance work they have to do. The good side, they're going to have to be really across their finances and be super prepared and using the people around them that are going to help them be in a really strong financial position to be able to meet the requirements of the payday super laws.
So what is the suggestion with around 7 months or so to go for this to come into effect, particularly when we know a lot of SMEs do face rather cash flow issues?
Yeah, I mean, and going on that, it's been a really tough market, as we know, for SMEs, and it's still there. I mean, consumer confidence is a little bit waning, and because of that, there's project delays, and that means slower revenues coming in. So, and those businesses with seasonal or lumpy payments, like they haven't got their regular ongoing revenue payments, are going to have to be really prepared. So when I say this is be really across your forecasting, be really across your expenses. And actually work really closely with a bookkeeper or an accountant that's going to help you be right across what's needed. Because we've had quarterly super requirements, now we're having to do it with every payday, right? So that's a massive change for a lot of people. Sorry.
I would imagine though, going into 2026, we talk non-stop about AI on this program. There must be a lot of tools out there for businesses to use to streamline this process.
100%. There's always really, really good tools out there. And we're the same in our business using some AI, but nothing ever beats being across exactly where your finances are as a business owner, whether that's having a strong CFO or having a strong accountant, strong bookkeeper, or yourself that's going to be right across them. So yes, AI tools are there, and yes, amazing accounting software tools are there. But also a lot of it is around you being prepared.
And what happens, Guy, if companies aren't prepared? What are they facing in terms of penalties from the ATO?
Yeah, well, there's always going to be fines. I think ATO's always been quite lenient initially, letting people giving them. And I think probably my gut feel is that'll still happen, that there's a little bit of leniency. But they've got till July to be ready. So, there's probably less and less excuses to be ready. You can use guys like us, right, who offer short-term bridging finance to help them get into that position if they're not already there with their cash flow. But what are the fines? Yeah, there will be some, but I think there will be a little bit of leniency while we're getting down of this period.
All right, well, let's talk about what people like you can do, because you do have some kind of bridging finance, right?
We do. So we're a cash flow lender. So we look at businesses and look at their financial situation and where they're at, how long they've been in business, and just sort of make a bit of a summation on how the amount of money we can lend to them. So we lend $20,000 and up to $2 million. For periods of 6 months up to 5 years. So we'll look at what the purpose of the loan is for. And if it's a short-term cash fix, we can help in some instances. I can't say we're going to do it categorically for all, but if a business is strong and they need a short-term help to sort of get them over the line, people like us, and there are other lenders apart from Banjo as well, non-bank lenders who can assist here. And we might do it as simply as looking at their bank statement transactions. So if they send us links to their main business account bank statement transactions, we can look at that and make a really clear assessment on where they need to be and if they can borrow some money from us.
If a company can't pay super, how much of a red flag is that? Because it should be, budgeted within their overall costs, right?
100%. Yeah, definitely should be. The only and it looks we look at things like that as well. So when we look at their bank statements, we'll look at things like regular payments to the ATO, regular payments to to superannuation, so all of that type of stuff to make sure that all businesses are well across their accounts, and that to us signals a really well run business. What we're talking here is just a short term, let's say 6 months, maybe 12 months sort of gap fix for them that might help them just be even further across their cash flow so they don't get caught out. And at the same time, it might allow them to pursue a project that's going to allow them to get further ahead. So there might be an opportunity cost here for not taking out a cash flow position, a cash flow loan type position.